Yo, what's up everyone? It's your boy Looney back with another video. Today we're going to talk about some current events and also what I've learned with put assignments and call assignments. We're going to focus a lot more on the puts because of recent activity with the stocks going down. And that's why I want to get into what's going on with the markets. If you guys don't know, the markets are shaky. Even today after China hit back with more tariffs, US doing retaliatory tariffs back, and there's just a constant battle back and forth. And today, the U.S. came out and said they're not going to tariff on a lot of electronics and tech, which actually which is why you're seeing a lot of upwards trends, especially in crypto. A lot of crypto is up today with Bitcoin and the other altcoins because they're the only ones that are open or that you could really trade on the weekends. There's a few stocks that move, I believe, 24 hours, but I don't think there's any that will move on the weekends. And that's why a lot of the moves are from crypto. And although there's a little bit of good news, that doesn't mean that I guess we're back or in the scenario that where we were before. So year to date, I'm still down 17%, down around 7,000. And I just want to get into why. So after getting assigned multiple times with Riot, I got assigned a bunch. I now have 800 shares of Riot. SoFi, I got assigned a few times. I have 300 shares of SoFi. And then Mara is another big stock that I own. And that one, 200. And it's about 8% of my portfolio. So let's get into what's important, because now that I've been assigned, I'm able to analyze what I did wrong or what I've learned from it. And one is strike selection. So whether it's cash secured puts or covered calls, where you choose your strike price is everything. Too close to the current price, and you're pretty much asking to get assigned. Too far, and you're not getting enough premium. So what I was doing when everything was good, we were getting a lot of good news, I was selling higher delta trades. A lot of selling puts are higher delta. And if you don't know, high delta when selling puts, it means that you have a higher chance of being assigned. So it's more risky. And I was doing it just because everything was going up. So I was a little euphoric with the trades. And because of that, I got hurt and I got assigned a little higher than I wanted to. So let me just look at the trades. So what I would have been doing, it was a lot higher when I was doing them, like $10 or $11. I was doing right at the money. So 44 delta, 25 delta. And now I've sort of changed my strategy. I wouldn't say change, but because of recent volatility, when I'm selling puts, make sure to be very cautious of delta, doing that 30 delta. And if it is on the lower Bollinger Band, if it's trading on the lower end of things, depending on what length I'm doing it for. So if I'm doing it for a week trade or let's say a month, it's trading right in the middle. So I want to pay attention to that lower Bollinger Band. And if I do decide to do one on either a week or a month, I would make sure to do either that 6.5 or 6. Make sure to be very safe with the deltas. And that's what I was doing wrong at the time. I was doing a lot higher deltas, not paying attention to where the stock was trading at, not really caring that Riot was a little overvalued. I knew it was, and I was still making these trades. And it's because I was thinking long term. So not the worst plan, but I could have had a better plan when getting into these assignments. And two, I was just talking about it, is the delta, which is your probability. That's your chance of getting assigned. You want a low delta, but you don't want to go too low because your premium's a little insignificant. So about that 30 delta is a great entry. And I was doing higher than that. I was doing 35 or 40. So now I'm either mixing in a few ones that are higher delta and then lower deltas, or just sticking away from those higher deltas. So you need to really ask yourself, are you okay with owning this stock at a certain price. And although I am okay with owning Riot at $10 or less than $10, psychology, when it comes into effect, it doesn't feel good when the stock drops below that. And because of that, I kind of regret doing a lot of these trades at higher deltas. But I do want to get into Riot a little bit more. I am a little too overexposed, and that's going to go into one of my other things to look out for. Watch out for your exposure. I'm a little too overexposed to this stock. So Riot, I have around 18%. You don't really want to be more than 10%, or else it deals with your emotions, or it's hard to deal with your emotions when you own most of your portfolio in one stock. So being diversified is very important. And that's why I'm holding off on Riot. Of course, I could be selling puts at great premiums and entry points, but I don't want to do more than 20%. I think that's a little too much exposure, especially because I own Mara as well, which is very similar to Riot. And that's why I've spread out my plays. I've been doing SoFi a lot more. I own 300 shares, and I'm very bullish on it. I'm also bullish on the other two, but this one, I have a good entry at $11, and I'm probably going to get assigned even lower. This 11.51 or $11 one seems like it is going to get assigned on next Friday, and I'll get a lower entry point. And then the next thing is to just know your tolerance, know your risk tolerance. Now, like I said, are you okay with looking out long term, or are you really just trying to do short term? Are you an emotional trader, or are you just very level headed? So because I mentioned that goes into effect. Your expiration date also matters if you want to do a short term or long term. But with your risk tolerance, you want to make sure that you're okay with the stock going down 50%. Hopefully it doesn't, but if it does, you have to know that it might take some time, but as long as you hold, eventually it will go back up to the price that you want to sell at, or just hold for as long as you can and just get covered calls to generate some income. And that's what's going on with me. I have a very similar risk tolerance to what I was before all these trades, but because like I said, with the Riot situation, I have really cut back on my risk tolerance. I've been going a lot lighter with the risks, a lot lower deltas, and I might start picking up deltas again. We'll see, mixing them up, might not, but as of now, I'm going lower delta just to be on the safe side, and it's very smart to do it that way. And you have to remember that assignment isn't always a bad thing. It isn't a failure. It's part of the wheel. So you get assigned for cheap, and then you sell covered calls to get out of that position. And now I treat every contract like I might get assigned at any moment, and that mindset is very helpful. You have to have that feeling that you're okay with owning the stock at that price, and that's why selling puts work the way they do. And if you want to see how I trade, because I do call out my trades on a weekly basis, I do mentorships, I do one-on-one coaching, newsletters, and giveaways. And I actually have a promotion going on for what I'm about to go over. So I have a Discord. It's free for anyone to join. And then I have a premium version, which you get more perks, like I just said. And I'm running a deal right now, just in light of all the tariff situation. You use code TARIFF in checkout, and that's TARIFF. And on checkout, in my premium link that you'll see in the description, you'll get a 25% off, and it's ending in 24 hours, or it should be ending in a day. And I would act fast, because you don't want to be left behind, especially with what's going on with the market. It is turning direction, moving very fast. But you can check it out. All links will be in the description. Let me know in the comments if you've ever been assigned, how to go. Like, subscribe, and I'll see you in the next one. Peace.